And good afternoon, I'm Lori Rothman.
And I'm Mark Crumpton. Thanks for sticking with us on Bloomberg News. Manufacturing expanded in December at the fastest pace in more than 3 years. Will this momentum continue into the new year?
Norbert Ore is chairman of the ISM Manufacturing Business Survey Committee of the Institute for Supply Management, and he joins us now live from Atlanta. Norbert, great to see you.
Thank you. Good to be with you.
So we've now seen manufacturing growth here in the U.S. for 5 consecutive months. What's more, what's better is that this month's reading showed a faster acceleration of manufacturing growth. So what's behind it? What's the driving force?
Well, the real driving force this month was both new orders and production, as we saw both of them above 60. New orders was at 65.5 and production was at 61.8. We've now seen 5 consecutive months of growth, and it's somewhat unusual that we see this second wave of strength in new orders in particular, where it goes back above 60. So a lot to feel good about, I think.
So, Norbert, just to clarify for some of our viewers, when you mention a level of 60, a level of this or that, anything above 50, correct, signifies expansion versus anything below 50 means contraction. So the fact that we're holding above these 50 levels and new orders, as you point out, coming in at a level of 60, this is good news. This is consistent with economic recovery, correct?
Absolutely. We're concerned about month-over-month change. Is this month better than last month? And a reading of 60 indicates that this month is significantly better than the prior month.
So you point out that if the December read on the survey is annualized, it corresponds to a 4.6% increase in real GDP. That said, do you think some of the economists are a little bit cautious with their 2010 GDP forecasts?
Well, I've seen a number of the economists predict 4% in the fourth quarter, so this number would be consistent with that. And then I think as we get into the first quarter of next year, we have to remember we've come off of a real bottom 5 months ago, very deep. And now we have the opportunity, I think, to continue the growth pattern. I think it'll be difficult going forward to maintain the level that we're at in December.
Norbert, give us a sense of what some of the respondents were telling you. What did you hear?
Well, a number of different themes. One theme is that capital is very tight. Not a surprise, because capacity utilization is relatively low, and so manufacturing usually doesn't invest at that point. We also have to remember that even though the data this month is very encouraging about manufacturing overall, only 9 of 18 industries reported growth. So there's a number of industries that are still struggling to get back into a growth mode.
Are consumer businesses showing any type of rebound?
I think the consumers are showing. A sector that's been very strong has been computers and electronic equipment, which really flies in the face of some of our numbers with regard to lack of investment in the business sector. The computers is primarily is a business investment issue.
The employment component of this index rose and is now showing growth for a 3rd month. Is this a good sign we're going to see continued improvement? December jobs report that comes out on Friday.
Yeah, I think our index is a better indicator of what's going to happen in terms of our manufacturers willing to hire. And it shifted positive 3 months ago. And I think that's really the way we ought to interpret it. If manufacturing, if they're picking up new orders significantly, and if it requires additional shifts or additional employment, that they're willing to do that.
Inventories also rose, but they're still below that key expansion level of 50. So how much of a drag is that on your overall index reading?
Well, the inventories index, 50 is normally the break-even point on that. But in inventory, in the case of inventories, if you relate it to historical inventory government data, 46 is probably a better number. So we're seeing some inventory replenishment. It's not at very strong levels. We've gone through the destocking cycle, but the restocking cycle is relatively low to start. It's also one of the reasons I think we can look forward to continued growth.
Norbert, despite these good numbers and as you said, looking forward to continued growth, there are still some industries that are mired in a downturn, 7 of them to be specific. Which ones are they?
The industries that are still struggling, you know, automotive and housing drive an awful lot of what goes on. So industries that are struggling are industries typically like textiles, wood products, any of those that are directly related to plastics and rubber products, glass, stone, and aggregate. Those are related to construction, and with commercial construction off and housing still very slow to come back, they're going to continue to struggle.